Hello class, welcome to Arjun English School, Standard 12, chapter number 2 in part 2 account. My chapter name is Accounting for Debenture and this is the fourth class for this chapter. I am going to start question number 13 today for the new method, that is collateral security. In question number 13 from your textbook, I am reading the question. A company had 21 lakhs issued 10.5% debenture as on 1st April 2017. During the year, company took a loan of 5,50,000 from the bank as on 10th August 2017. Against the company issued new 10.5% debenture of rupees 5,50,000 as a collateral security. The word used in the question collateral security. It means company issued debenture and against which company had taken a loan from the bank. Now pass the necessary journal entries for following methods. Means there are two methods. I am going to start from the first method. When entry is recorded means when journal entry is passed. First method. So here the journal entry for loan obtained from the bank, that is bank account debit to bank loan account. Bank account debit to bank loan account. The loan amount is 5,50,000. So 5,50,000 is the amount for which loan is obtained. Second entry, that is debenture suspense for amount of debenture which is mortgage to raise the bank loan from the bank. So here second journal entry, that is debenture suspense account debit to 10.5% debenture account. And here debenture mortgage as a collateral security for 5 lakh. So there are two entries, simply date, particulars, LF, debit and credit. Very simple. This is the first method for which we have to pass the journal entry, and also uh, they ask to show the details in company's balance sheet. So now we have to prepare extract of balance sheet. Now what is extract? It is the very small summary for only these types of transaction. Extract of balance sheet as on 31st March 2018. Okay, so here the format is particular, note number, amount, amount. That's it. Particular, note number, amount, amount. Now this is the liability part. So first of all heading, that is equity and liability, and under this heading it is non-current liability, where we have to present a bank loan obtained from the bank for 5,50,000. So bank loan 5,50,000, and there is another loan, that is long term borrowings, that is 10.5% debenture. Debenture raised for 5 lakh rupees. Now less debenture suspense for 5 lakh rupees. So overall, in outer column there is no any debenture presented, because this debenture is with the bank as a collateral security. Okay, so simply just in under the non-current liability, it is a long-term borrowings, that is bank loan, which is obtained from the bank for 5,50,000. So first of all, loan amount, that is 5,50,000, and second one, 10.5% debenture, that is for 5 lakh, and this debenture issued, but not it is with the company, but it is issued and it is directly given to the bank. So debenture suspense account 5 lakh, that is deducted. So overall, no debenture with the company. Okay. Now in bank loan, in bracket, we have to write like bank loan on collateral security of debenture of 5 lakh rupees. Okay. So bank loan 5,50,000, that is obtained against a debenture which is mortgage as a collateral security. And second thing, debenture already given in the question, 10.5% debenture, it is also a part of non-current liability, that is 21 lakhs. This is the first method, where there are basically three entry. First of all, bank loan obtained from the bank. Second one, debenture, that is stood as a collateral security, and third one, debenture, which is given in the question. So this is called the first method. Now, what are the changes in second method? So I am here writing the name of second method, where journal entry is not passed. So if journal entry is not required, then this second journal entry is removed from the answer. Okay, so now here it is the second method, journal entry not passed. So only simple journal entry, that is bank account debit to bank loan account, that's it. Amount, that is for 5,50,000, 5,50,000. Now in balance sheet, equity and liability, under the heading of non-current liability, bank loan amount, that is for 5,50,000 on collateral security of 5 lakh, debenture of 5 lakh rupees, and 10.5% debenture, that is 21 lakh, under which 5 lakh debenture is as collateral security. So second method is over now. So you can see that there is a sim in both the methods are very simple, and two methods are connected with each other. In first method, we have to pass the two journal entries and debenture suspense account, that is to be presented in the balance sheet. But in second method, only single journal entry is passed. It means for debenture suspense, journal entry is not passed, and in balance sheet, debenture suspense account that is not required to be presented. That's it. So this is the sum which is related to collateral security. Okay. So question number 13 that is over. Now I'm going to start the next sum, that is question number 14. Alibaba Limited. So I have to write journal entries of Alibaba Limited. First of all, it's a date, then after particular, LF, debit, and credit. I'm reading the question. Alibaba Limited issued 18,012% debenture at the face value of rupees 100 as on 1st April 2017. So, first of all, on 1/4/2017, debenture issued, but here there is no installment, it is a lump sum. So, only simple two journal entries for issue of debenture. First one, bank account debit to rate of interest 12%. So, now to 12% debenture application and allotment account. Second one, on the same date 1/4/2017, 12% debenture application and allotment account debit to 12% debenture account. Got it? So these are the two entries for the issue of debenture. Then after, they provided that interest on this debenture is paid on 30th September and 31st March. So now on 30th September 2017, there is a journal entry for interest on debenture, that is interest on debenture account debit to debenture holder account. Means this interest goes into the account of debenture holder. But here income tax rate is given, that is 20%. It means on this amount income tax will deduct TDS. So now to TDS payable account. Simple. And they provided that interest is paid twice in a year. So interest is paid on half yearly basis. First of all, interest is paid on 30th September. That is interest on debenture to debenture holder, but debenture holder got the amount after deducting TDS. And second one on the same date, 30th September. That is debenture holder account debit TDS payable account debit to bank account. This journal entry is on the 30th September for half yearly. Now these two entries are same to same, but the date change, that is 31st March 2018, again 31st March 2018. Same entry, interest on debenture account debit to debenture holder account, to TDS payable account, then after debenture holder account debit, TDS payable account debit to bank account. Got it? Now, the next is amount part. First of all, 18,000 debenture issued at the rate of 100 rupees. So 18,000 multiplied by 100, we got the amount that is 18 lakhs. 18 lakh debit, 18 lakh credit. Same way, again 18 lakh debit and 18 lakh credit. Got it? Now interest amount. On this 18 lakh, there is an interest rate that is 12%. So on 18 lakh, 12% it comes to 2 lakh 16,000. This 2 lakh 16,000 is per annum. But here in the question they provided that interest that is to be paid on half year basis, means equally it is divided in half on half yearly basis, that is 1 lakh 8,000 and 1 lakh 8,000. So now interest amount that is 1 lakh 8,000, but on which TDS that is 20% is deducted. So 1 lakh 8,000 multiplied by 20%, it comes to 21,600, and the remaining part that is 86,400. Now these two credit entries comes on debit side 86,400, 21,600, and total comes to again 1 lakh 8,000. Now again this journal entry that is repeated on 31st March. So if journal entry is same, amount is also same. 86,400, 21,600, again 86,400, 21,600, and total comes to 1 lakh 8,000. Simple. So finally this sum is over, and from the next class I am going to start another method for this chapter. Okay, thank you.